Hey, it's David from Freedom Founders. When I tell doctors, dentists, chiropractors, veterinarians, MDs, that I think the last thing they should be doing is investing their money in like a 401k or defined benefit plan or cash balance plan, all those things that are all about tax deferral, they look at me with glazed eyes. It's like, how can you say that? I mean, that's the first thing that we're told to do by who? Yeah, the financial markets, Wall Street. They want you to do that. They want you to tie your money up, your hard earned money, and tie it up in their constructs, their frameworks, where you can't get to it until you're 59 and a half. See, once you put that money in there and get that tax deduction and now that tax deferral, yeah, you've locked your money up. You've put it in prison. That's what I call it. You put it in prison now until you're 59 and a half. Try to take it out before then, yeah, you're going to pay a penalty and the taxes on that. Not a good thing. They've got your money tied up for years and years and years, and that's exactly where they want you. So, David, well, what about the tax deferral? What about the power of compounding? Yeah, I get it. Absolutely. Not taken away from that at all. If you can put your money to work and defer the taxes, or better yet, go tax free, I'm all about that. But I don't want to do it in a construct where for most people, because you have office employees, you can't manage that money. You take that 401k, defined benefit plan, cash balance plan, and it's got to be put with somebody else that's going to manage it for you. A third party, right? A fiduciary, so they call it. Well, where are they going to invest it or manage it? On Wall Street. Wall Street's not the place to go. Well, why not, David? What do financial advisors tell people today that when they're getting ready to, quote, retire, what are they supposed to do with their money that's been in the stock market all these years, to going up and down, up and down? What do they tell them? Get your money out of the market and get it into conservative investments. Well, why would they tell you that? Because it's volatile. Because they don't have a clue when it's going to hit bottom again, and when you've lost the ability to make up for lost time in active income, when you shut that income stream down, you got no second chances. So they don't want you to. They want you to try to stack your money up and play the stock market casino game for 30, 40 years, and then all of a sudden take whatever you've built up and now take it and put it in CDs or T-bills or bonds and get like paltry returns. Is that really the way you want to do it? Look, tax deferral, again, is great, but there's so many ways to get tax preferences, tax mitigation, and still have control of your money without putting it in those constructs. That's why I say don't do it. Now, if that's all you're going to do, if you're doing nothing else and you don't have any motivation to orchestrate or direct your own financial future, then yeah, go do it. Go put your money in and at least have some discipline to do something. But if you have the desire to be different, to actually live a life of freedom, to get ahead of the game, the whole taxation, the whole inflation game, you got to get your money working for you, and you can't do that on Wall Street. It's a casino. It's gambling. Don't go there. That's why I tell people don't do the 401k. But again, I'm not speaking to the majority, am I? Hopefully I'm speaking to you. If you're not that person, then put your money there. Keep your fingers crossed. Hope for the best. Always remember to stay focused on your freedom. This is David. I'll see you next time.